Welcome to the first episode of KuCoin's Crypto Crash course. Whether you're a newcomer to crypto or already a pro, if you're just lacking that knowledge to really dive deep into a project and do your own research, great news. This course is for you. This comprehensive guide is going to walk you through the nitty-gritty of crypto. By the end of this course, you should have enough practical knowledge to locate that next hidden gem. Trust me when I say this, I wish I had a course like this when I first got started. I fell victim to some rookie mistakes, but don't worry, I'm going to show you how to avoid all of them. Before we begin, nothing in this video is financial advice. This video is meant for entertainment and educational purposes only. Make sure you always do your own research before making any financial investment. And when you are ready to invest in crypto, there will be a referral link in the description for 20% off when you trade on KuCoin. And with that out of the way, let's get started. Since this is the first episode in this series, I thought it'd be best if we start by giving you a preview of what you can expect. This video will serve as the foundation to all the others in this series, and you can expect us to cover how to spot trends and how to take advantage of them, the different strategies when trading, how to avoid common mistakes made by new investors, the research tools I summon when looking for that hidden gem, how to research a project quickly or how to do a deep dive, timing the market, and more. Oh, and if there's any topics you'd really love us to cover, we want to know. Let us know in the comments down below. To give you that solid crypto foundation, I've put together 5 tips every crypto investor must know. Let's get right into it with our first tip, and that's understanding market behavior. Let's start with a little bit of a thought experiment. If I asked you, how could you predict the lion's next move? How would you do that? Well, you'd have to study its behavior. You'd have to watch it in its habitat, and you'd have to see what triggers it and how it reacts to certain stimuli. If you did all of that, you might possibly be able to tell me what the lion's going to do next. Well, believe it or not, the crypto market is not so different. Why is that? The crypto market is driven very largely by human behavior. The name for this is called market sentiment. Understanding the current market sentiment can help you pick up on trends and predict the next big move before it happens. Another name for this is also called herd mentality. You can also think about market sentiment like the most popular opinion amongst other crypto investors. The funny thing is, sentiment usually ends up becoming a self-fulfilling prophecy. For example, if recent events cause a lot of investors to think the price of a token is going to be going down, well, a lot of investors are going to be pulling out and the price goes down. Self-fulfilling prophecy. The reverse is also true. If a lot of investors think the price of a token is going to be going higher, a lot of investors buy in, the price goes higher, self-fulfilling prophecy. This isn't always the case, but you'd be surprised how often this does happen. Once you start to understand this, you'll be able to predict where the herd is going to move next, and knowing this will give you an edge in the markets. That's why in future episodes, we're going to teach you how to utilize powerful tools like Sentiment, Glassnode, Masari, and more. For our second tip, you must develop the right mindset. While knowing market behavior is tremendously important, it is equally important to have the right mindset, otherwise you'll just end up part of the herd. You have to learn how to tame your emotions so you can trade in these markets with efficiency. Trading with your emotions has time and time again been a proven way to wreck inexperienced investors. You have to learn how to hold yourself accountable for your own decisions, and your decisions should be driven by logic. Using rational and realistic thinking to make your investments will give you a sense of calm and confidence. If you invest in something that you understand and researched well, you're not going to panic and sell if the price suddenly dips. Unless the underlying reasons of why you invested in a project suddenly change, you'll be able to weather the storm. If you find yourself always reacting to the latest breaking news by selling or buying new investments, it's probably a sign that your decisions are being driven by your emotions and not rational thinking. So, how do we stop this? That brings us to our third tip, and that is building your knowledge in the crypto space. To not be so easily influenced by your emotions, you have to ground yourself with knowledge in the crypto industry. Unless you possess some psychic abilities, trading with your gut is almost certainly going to lead you to a disaster. Ideally, decisions should always be made by observation and analysis of the facts. And the best way to do that is by building your knowledge in the crypto world. By constantly surrounding yourself with the most up-to-date information, you can start understanding how everything works and even make predictions about what's to come. We'll introduce you to some of the most reliable sources you can get in crypto in future episodes. If you don't have the habit of reading, you might want to get into it if you want to stay ahead of the curve. You really have to keep your eyes peeled and keep up with the latest trends. It doesn't matter if the market is in an uptrend or a downtrend, bull market or a bear market, staying up to date is critical. And don't worry, I know that just reading through some news articles might not give you enough information to pull the trigger and make that investment. That's why in a future episode, we're going to show you how to do a deep dive into an altcoin. So keep that one on your radar. And that brings us to our next tip, and that is which trading strategy works best for you. Here are some factors to consider before picking your trading technique. How much risk are you comfortable taking? How long do you plan to hold your positions? And what is your willingness to adapt to market influencing factors? Let's go over the three main strategies and you can decide which one works best for you. Holding, or if you're in crypto, we call it hodling, is really common amongst retail investors. And the retail investors just mean investors just like me or you, everyday normal people. The idea here is you're going to be buying into a project that you believe is going to be growing over time. Hodling usually takes place over months or even years. This method is perfect for investors who might not know a lot about crypto and they don't want to be really involved in the day-to-day affairs and what's going on in the market, and they just believe over time their investment is going to grow. That all sounds good, but that doesn't mean hodling comes with no risks. Picking the wrong coin could leave you holding bags all the way down to zero. Worse yet, picking the wrong project could also get you involved in a rug pull. Don't worry, I'll teach you more about rug pulls and how to avoid them in a future episode. Lastly, compared to other trading methods, it might not be the most profitable. That brings us to our second method, which is day trading. Day trading is one of the most popular ways to trade crypto and is popular among retail investors and institutions. If you adopt this method, you're going to be called a day trader, and that's because day traders don't hold a position for longer than a day. Makes sense, right? The strategy here is getting in and out and making profits over time. Every trade might not be profitable, but you want to have more profitable trades than not. Many day traders do their transactions on centralized crypto exchanges like KuCoin. While promising big returns in the short term, it could also lead to big losses if done wrong. And that's not to mention how stressful it can all be. You must constantly keep your eyes on the market, watch charts, read up on news, and more, and you might just be second guessing every decision you make. This trading strategy is not for everyone. That brings us to swing trading. To keep things really simple, swing trading is basically the position between day trading and hodling. Swing trading is more common among institutions while they consider larger time frames, do chart analysis, and make price predictions. Swing traders can also set stop losses, which will close a position at a certain price that they set. We're not going to get too much into it right now, but rest assured we will cover it again later in a future episode. The cons of swing trading is similar to day trading with the added uncertainty of market events. For example, if a news story just came out that a country was going to ban crypto, it could send the markets crashing down. Conversely, if a big company were to announce they're adding crypto to their balance sheet, it could pump everything up. In short, the longer you hold on to your position, the chances are pretty high that some unforeseen volatility is going to come your way. Alright, one last tip before we wrap up this video, and that is learning the language of crypto. All of my reading tips I gave you earlier are not going to help if you don't understand some of these common terms. Don't worry, I'm going to walk you through some of these common terms and even clear up some misconceptions. Alright, let's start off really easy with altcoin, and I'm sure you've already heard the term about a million times, but what you might not have heard is that it stands for alternative coin, and an altcoin is literally any coin or token that is not Bitcoin. Let's keep things easy with the term all-time high, which is also abbreviated with ATH, and that basically is the highest price a coin or token has ever hit. The opposite of that would be all-time low, which would be the lowest point a coin or token has ever hit. During a bear market, you can look at the previous coin's all-time high, and if they're still doing a lot of development and good work, the chances are that during the next bull market, they're going to be hitting a new all-time high. Alright, next up is trading volume, and this one is often confused. Trading volume measures the quantity or value of a digital assets being traded over a specific period of time. The time could be measured in minutes, hours, days, or more. This includes both buys and sells, so if you want to know how active a coin is being traded, check the trading volume. Another term you'll often see is called consolidation. Consolidation can be identified when looking at a chart with sideways movement. It usually is happening during a time of low trading volume as well. The next few terms are very important and kind of go together, so let's take a look. Circulating supply is simply the current amount of coins or tokens that are out in a cryptocurrency. Next up, total market cap. The total market cap is when you take the circulating supply and multiply it by the current price of the coin or token. Let me give you a very simple example. Let's say that a coin had a circulating supply of 1 million, and then the current value of each coin was $1. In this case, the total market cap would be $1 million. Easy, right? The next one's going to be total supply. The total supply tells you the total number of coins or tokens in existence at this moment. This includes the tokens or coins that are publicly available or locked by other means. The next one's a bit easier, and that's maximum supply. Maximum supply simply tells you the maximum amount of tokens or coins that will be created in a cryptocurrency. Finally, we can talk about probably the most easily confused term, and that is the fully diluted market cap. The fully diluted market cap considers the maximum supply multiplied by the current price. To make things really simple, remember that coin I said that had a circulating supply of 1 million multiplied by $1 to get $1 million market cap? Let's say that the maximum supply of that coin was 2 million and the current price was still $1, so the fully diluted market cap would be $2 million. All right, we have now arrived at the end of today's episode. Those were 5 tips every crypto investor must know. I know we covered a lot, but I promise you there's so much more to go over in future episodes. If you have any questions about today's episode or have suggestions for what you'd like us to cover in the future, please let us know in the comments below. If you found this video helpful, you could help me out by hitting that like button and subscribing to the KuCoin YouTube channel. And don't forget, if you want to get started using KuCoin, there is a referral link in the description for 20% off when you trade using KuCoin. And lastly, before you go, why not check out some of these other great videos on the KuCoin channel? This has been a KuCoin video.